VeChain is currently trading at 2.465 cents, and folks, this might be one of the most oversold situations we've seen in the crypto space recently. We're looking at a token that's down over 22% in the past week, creating what I believe is an exceptional opportunity for those willing to step in when others are running for the exits. The recent sell-off has pushed VET into territory that screams oversold on every metric I'm tracking. We've tested the 2.386 support level multiple times, and so far it's holding like a brick wall. This is absolutely critical because this level represents the foundation for any potential recovery we might see in the coming days. Here's what I'm expecting for the next 72 hours. We should see VET attempt to reclaim the 2.586 level first. That's about a 5% move from current levels, which should be easily achievable if we get any kind of bounce from these deeply oversold conditions. Once we clear that hurdle, the next target becomes 2.72 cents, followed by 2.798, that's where we hit yesterday's high. The really exciting part is the potential for VET to push all the way back to 2.89 cents within the next 3 trading sessions. That would represent nearly a 17% gain from current levels, and given how far we've fallen, this kind of snapback move is not only possible but highly probable. For entry strategy, I love the current levels around 2.465. If you want to be more aggressive, you can try to catch the knife at 2.386 if we test that support again. Your stop loss absolutely must be below 2.3 cents, that's your line in the sand. If we break that level, the whole setup falls apart and you need to exit immediately. The daily volatility we're expecting is around 1.8 cents, which translates to roughly 7 to 8% daily swings. That's substantial enough to generate serious returns if you position correctly, but also enough to cause real damage if you're not managing risk properly. My confidence level on this bounce is 75%, which is exceptionally high for a crypto trade. The technical setup is just too compelling. We've got oversold momentum, solid support holding, and the kind of rubber band effect that usually leads to explosive reversals in this market. Position sizing is crucial here. Don't go all in, but this is definitely worth taking a meaningful swing at. The risk-reward is fantastic. You're risking about 6 to 7% to potentially make 15 to 20% if this plays out as expected. The key levels to monitor are 2.586 for initial confirmation that the bounce is real, 2.72 for continuation, and 2.89 for the full recovery target. Above that last level, we start looking at much more ambitious upside targets. What makes this even more interesting is the fundamental backdrop. VeChain has been implementing some major protocol upgrades that could provide additional tailwinds for any technical recovery we see. Sometimes the best opportunities come when technical oversold conditions align with improving fundamentals. This is exactly the type of setup that separates successful traders from the crowd, having the conviction to buy when everything looks terrible but the math is screaming opportunity.